Hi traders. So you believe that combining candlesticks with technical indicators can give you an advantage in the market? If you are thinking so, you are right, and I'm going to show you how you can gain an advantage in the market by combining candlestick psychology with technical indicators, in our case, Bollinger Bands. Welcome. Yes, on my charts, this is Euro USD 1 minute time frame. You could apply this to any other time frame of your choice. It's Euro USD M1, as you can see. This is the ordinary Bollinger Band. I've just disabled the middle line, the 20 SMA. I've disabled that. And as you can see, this is just simply set to the ordinary 20 with a deviation of 2. No big deal. I've just disabled the band, the center, the main line, which is the 20 SMA. So we have the upper band. I've colored it red. The lower band, I've colored it green. I'm also using an indicator that automatically identifies bullish engulfing patterns appearing on the lower band of the Bollinger Band and bearish engulfing patterns appearing at the top of the upper band. The criteria is very simple. At least one of the two candlesticks forming the engulfing pattern must close outside the band, or at least touch the band. If you check this one, the green has been engulfed by the red. The green is touching or at least outside the upper band. If you check this, the red has been engulfed by the green. The red had a lower, had penetrated outside the candle. You can see that is the same logic. It must touch or at least close outside one of those. And so this is pure Bollinger Band and engulfing patterns with the help of an indicator to automatically identify this. And guys, for sure, I can send you this indicator if you're interested. So you just need to let me know. So how do we then approach this? For example, without using this, you are going to make wrong entries. Let me show you how my analysis can help you trade engulfing patterns that are at the Bollinger Bands, or even outside the Bollinger Bands, much more profitably or successfully. You need to understand the price action before the pattern, because remember, this indicator will be able to pinpoint all cases where we have engulfing patterns at the border, engulfing patterns occurring at the border. That will be able to do that for you. However, I don't want you to go about trading every of these patterns. I want you to use your mind a little bit in a better way in the context of trading this. So if you want to study this, let me zoom. Look at that. Big candle, small candle, still a small candle, but this is slightly bigger than this. But I want you to study what's going up. This is a sign of what? Reversal. A pin bar. A spinning top. A sign of reversal. Followed by what? An engulfing pattern. That gives you confirmation that price is gonna go down. Now look at this other pattern here. Doji. Look at that wick at the bottom. Look at that candle. Then look at this pin bar. Again, lower prices rejected. That tells you price is gonna go up. Let's carry on. Look at how market went down from the upper band, red all the way. But along the way, there were signs that things would change. But look at what happened exactly. Market indecisive, lower wick, spinning top. Look at this candle. Now the wick is at the top and the candle closed without a wick below. Simply telling you there is a very strong movement to downside. You see this candle, the wick below is also very strong. You look at this candle that has been engulfed. The wick above is longer than the wick below, telling you, longer, but not really that long. But again, telling you that, the market may not be really interested in going up anymore. But then, when you see this happening, this engulfing, look at it. The engulfing, the green bar, is even, it's actually within the body of the candle that has been engulfed. Not the body, but the whole range from top to bottom. Will not be very comfortable with that. If you were to take that, you would lose. But based on the analysis, the market is sharply moving down. Look at this other one. Rejection week up, rejection week up, rejection week up, rejection week up. There were clear signals that the market is being resisted from moving above. That should have given you confidence to move down. Look at this other case. Now, this is an interesting one. Okay, markets comes down, lower prices rejected, higher prices rejected, balanced, lower price rejected, lower price rejected, engulfing to the downside, but with a lower price rejection. They're coming here telling you, rejecting higher prices. Interesting. I'll be hesitant to take a signal like this. Let's carry on. Now let's see what's happening. Price moving up. Some level of indecisiveness. Short candle, short candle. Look at that wick rejecting the upper prices or the higher prices. Then engulfing following. That tells you we are likely to move down. I'll give you all the cases. Look at this. Even starting from here. Strong, 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 strong. Massive rejection. About to push up but could not go above the wick. Massive rejection. Indecisive market. It's a tiny candle. Engulfed by a very large candle. Confirming we are moving down. Look at this one. This is an interesting. Higher rejection, lower rejection, lower rejection. Why would you want to risk a trade like this? The previous candles will tell you that the price is not going to move up. Rejected lower prices, meaning it's likely to move up. Again, rejected lower prices, likely to move up. Don't enter put there. Look at what's happening here. Also, massive engulfing to the downside. A rejection of a lower price, rejection of a lower price. But look at what's happening. Balanced. The upper wick, the lower wick are pretty much the same. Meaning price can go either direction. Don't risk. Then look at this. Maybe starting, just analyze like 5 candles before. Higher price rejection, lower price rejection. Higher price rejection, lower price rejection. Higher price rejection. Now, what do you notice? The market seems to be sending mixed signals. Saying rejecting higher prices, then rejecting lower prices. Rejecting higher prices, rejecting lower prices. Rejecting higher prices. So still, if you were to enter trade here, unless there's a problem, look at this candle and this candle, they're the same size. Really. Pretty the same. The difference between these two is too tiny. You wouldn't consider this a true engulfing candlestick pattern, so you can't skip the signal. Nice one. Look at that. Rejected higher price, balanced, lower price rejected, but now higher, followed by an engulfing. Very good signal. Rejection, rejection, engulfing, confirmation. Okay? So that's a good signal for you. You can potentially play that. And some more. Look at how price started from here. Strong movement, lower rejection, higher rejection, higher rejection. This is one that you would potentially trade to the downside. And this is a losing signal. It had all the signals that for sure price would go down but did not go down. So accept the loss and move on. Oh, this is a tough one. Rejection, balanced, rejection in the opposite direction. Very strong candle to the upside. Rejection of lower price. I wouldn't take this. I will not take this. So just to let you know, I wouldn't trade that. Then look at this. Strong, some minor rejection. Strong green. Higher price rejection. Balanced. Confused market. Balanced. But higher price, meaning price is likely to move down. Don't trade here. And now we have one that's happening here. A recent market. Rejection of lower price, rejection of lower price, rejection of higher price, rejection of lower price, rejection of higher price. Quite a confusing case. I wouldn't take this because the market can easily jump down. So I thought I would share this. Maybe we can pick a different currency pair like USD CAD. Let me drag it. Now we are on USD card. Let's try to analyze USD card for, I think, today, maybe just today only. This is the last pair we are doing so that we are able to get the clarity. It's good to understand what the market is doing before you enter a trade. Okay. So look at the movement here. A lot of red. What does that tell you? Strong downtrend. Okay. Look at the previous candles just before the actual engulfing. Eh? Very strong candle, no wicks. The market's moving down. Then the market tells you, I'm not sure where I'm going. A wick to the bottom, a wick to the top. A signal like this, like I said, skip, because the market can go either direction. The wicks tell you. Okay. Let's see another one. Here we have another one. Strong move to the downside, longer wick, rejection. A wick at the bottom, rejection. Balanced wicks, a long wick to the bottom, rejection. That's a signal that you can confidently take to the upside. Here we have another one. You can see red, 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 very few greens, meaning a sharp downtrend. Let's confirm whether you can take the trade or not. From here, a wick at the bottom, meaning rejecting higher prices, don't go up. Very strong, no wicks, strong down move. A rejection of lower price, now a rejection of higher price before the engulfing. The candle engulfing, the other one, they are pretty much the same size. But the candle before it tells you, the higher wick, the longer upper wick tells you higher prices have been rejected. For sure, don't try to trade a call. Same thing here. Lower price rejected, slightly lower price rejected. Now higher prices rejected. This confirms higher prices have been rejected even further. Don't try to do a call. What's happening here too? Same thing. Lower price rejected, very strong move down. Higher price rejected, lower price rejected. Confused. Upper wick and lower wick are the same. Confused. Do not proceed. Guys, don't always take every setup. Look at this. Coming from here, lower price rejected, strong move to the downside. Lower price rejected, lower price rejected, lower price rejected, lower price rejected. The wick is slightly longer than, or the lower is higher, longer than the upper one. You can do a call. 3 minutes, that would be fine. Look at the other one. Strong move, lower wick here. Now there's a wick at the top. Look at the long upper wick before the engulfing. The engulfing is, the candle is bigger than this. You do a put. Look at this one. Upper wick meaning rejection of higher prices, rejection of lower prices, rejection of higher prices, rejection of lower prices, rejection of lower prices. Don't enter this. Skip. Nice signals. So look at this. Rejected higher price, rejected higher price, rejected lower price, lower and higher, rejected higher, rejected lower, now rejected higher price. Strong engulfing. The candle is too big, but the previous candle said higher prices were rejected. So please go down. The most recent candles are very important. Look at this. Upper wick, upper wick, upper wick. Now look at this. Lower wick. Tiny candle engulfed by a large candle. Go up. Look at this. I will tell you this one that you not pick. Look at even the last 2-3 candles. Long upper wick, long upper wick. Look at even the candle engulfing the other one. It's not an engulfing as such. So skip. In backtesting, you say, oh, but I take that. No. When you are trading live, you need to analyze the market. Don't just trade like that. So you skip this because there is no confirmed proper engulfing. Maybe I can improve on the engulfing we are talking about here. Simple, more examples could include, let me see this one. Lower price rejected, higher price rejected, higher price rejected, lower price rejected. Finally, before the engulfing, you can do a call. I think this will be a barely make it, starting from the same place and closing at the same place. This is an ATM thing. Look at this one. Rejected higher price, rejected higher price, rejected higher price. Do a put here. 1, 2, 3. 3 minutes. That would be fine. This one, look at even where the candles are right at the center of the Bollinger Band, not at the top or the bottom. Crazy, don't go that route. This one, spinning top, more like a spinning top. This means not decided, not decided. Don't trade because price can go either direction. Maybe two more. The engulfing candle that's engulfing this is even smaller than this, slightly bigger than this. The one that's being engulfed at a long upper wick than a lower wick, meaning higher prices are being rejected. So you don't expect price to go up. This one does not work because the wick at the top is smaller than the wick at the bottom, meaning price is likely to start jumping up instead. Some more. Long lower wick, long lower wick, long lower wick. Engulfing, you take a trade. 1, 2, 3. This ITM. All right. This one would be a loss. I think lower wick, upper wick, lower wick. This would be a loss. This is a nice winner. Look at this. Rejection, rejection, rejection. Engulfing, up. Just scanning very quickly. I have a call. Maybe my voice is not very clear. I have a call, so forgive me for that. The guys, I think I don't want to make the video very long, but I think I've been able to demonstrate to you how you can use Bollinger Bands combined with engulfing candlestick patterns to make some entries. You can filter this if you want with other tools. For example, you might want to introduce a support resistance. You can introduce a support resistance so that you are able to take a trade. For example, where this engulfing occurred, you need to check, was there a support and resistance? Going back, I can see there was a support resistance here. So you see, they lined up very well. This is what we call a high probability trade. Consider this one also. Let me see where I can get one that is quite clear. Look at this one, the engulfing that happened here. How could you confirm it's a high probability trade? You look back. Was there any other level that you could trade? I don't see any support behind it. I would skip that. What about this one? Do I have a level behind? No. This one? No. This one? Yes. Because there was a resistance right here. So this will be high probability put. Again, now consider this one. Supposed to be engulfing. Upward move. But is there a support level? No. Skip. I will show you another one. This one, was there something like that behind? Nothing, so skip. Let's go to the end. What about any other engulfing patterns that you see around, guys? Let's see. We saw this one. Let's pick USD JPY. This example, maybe I can zoom to see much better. This example here, the engulfing here, was there a resistance? Yes, there was a resistance here. So this would be a high probability setup. What about this call down here? This one, the engulfing here. Was there support? No support. This one had been broken, so there was no clear support at that level. Plus, again, if you look at the analysis, most likely the analysis is wrong here. Or maybe it's just a mere basic losing setup. But to me, I wasn't comfortable with the support because look at, you are moving far back without getting something useful. This resistance here, was there a resistance here before the engulfing occurred? Clear resistance, I'm following that. Too far behind. Of course, that requires discretion. So those are other ways of improving your strategy by introducing support and resistance levels. Guys, I believe I've been able to explain to you how to use this tool. Just a recap is ensure that you understand the meaning of the candlesticks that just appeared before the one you are trading. For example, here, just a final one for a put. Ensure that the wicks at the top are longer than the wicks below if you're doing a put. In our case here, that doesn't seem to be the case because there's a longer wick below than an upper. So this is a signal I wouldn't want to take. But this one, I would want to take this one. Okay, I would want to take this one because, okay, there was indecision here, rejection, indecision, long lower wick. I would want to take this one, of course. Unfortunately, I would lose that. This one, I would take this one, long lower wick before the engulfing. Okay, there were wicks below that before then, even this one. So 3 candles, that will be an ITM. This one I wouldn't want to take a risk because lower wick, they are longer. The longer lower wicks indicate price is rejecting lower prices. That's my analysis. There are those who would interpret this as meaning price can go down, but for me that's what I do. This one is okay. Higher prices rejected, engulfing, we go down. Lower prices rejected. You know, the lower wick is longer than the other, meaning price is likely to continue moving up. This is what happened. Okay. The wick below is longer than the wick above. So I would want to take this potentially because again, we had so many other longer lower wicks before then. Look at this candle. This wick is longer than the upper wick, meaning price after the engulfing is likely to continue moving up. That's what happened. So don't do that. This one, this is a massive rejection of higher price before this. I wouldn't want to take this kind of trade. What about this one? I would also not want to continue trading in a case like this. Long upper wick, just before this candle that are almost the same size of wicks. Price can go either direction. The same way here, we had a rejection at the top previous candle. The next candle is not really indicating a serious or a decisive rejection of lower prices. You can expect to see price continue going down. When you see this gives you confidence that price is likely to move in the other direction. Unfortunately, that's a case of a losing signal. Okay, so that's how you can combine the power of candlesticks with Bollinger Bands to make better trades. Lower prices rejected before the engulfing. So if you entered a put, your price would just switch to the other side. Now, if you can combine this with the strategy I shared on how to trade price action with the Bollinger Bands, I'm giving you a professional tip. You can come up with a very powerful strategy if you can combine them. Now, let me show you the final tip before I close the video. Final tip, very powerful again. Now, you can use confluence of candlestick patterns. For example, when this candle and this candle and this candle are combined, what do you realize? Morning star, something close to morning star. High probability to the upside. Now, when you combine this and this and this, what do you notice? Engulfing plus shooting star or doji. Okay? Is this a gravestone doji, something like that? High probability to the downside. Now, what can you combine with these things? This looks like an evening star. Okay? An evening star. From that explanation, that will be, you would trade it that way, but of course, from my previous explanation, you don't trade that. Then this is just engulfing, strong engulfing. Not much. There's nothing else to add to the psychology. Here is just engulfing. I don't see anything useful. It's not even a morning star because a morning star has its own way. This candle has to be a full body, not just another doji. Again, here is not a nice pattern. I want you to see another, like now there's a pin bar. Okay, there's a shooting star, then a bearish engulfing, high probability. Look at this. Doji, then engulfing. What pattern is that? You can't even describe it. Okay, although this one would look like a pin bar, well, not that good. Of course, this would be a losing signal, and potentially you would trade it because of rejection, and then engulfing. This one, I can't qualify it in any way. There is nothing, no other special pattern here. I want you to be seeing pin bars combined with engulfing. Powerful. Wicks are everywhere, up and down. That's not very useful. Not very useful here again. All right. Candle not more or less the same size. Much better here. This is like a serious pin bar engulfed. Right. This one again, we analyze it. So if you are able to spot another pattern besides the engulfing, that should be able to give you some added confirmation that for sure price intends to go in the direction you are picking. Okay. So I thought I needed to share that, that thing. that technique, yeah, so that you guys can see whether you can combine it. If you're using Bollinger Bands, you can try, and it's not just Bollinger Bands. You can Bollinger Band. You can use other tools. You can use other tools, and it's not just engulfing candlestick patterns. You can try other patterns at the, the upper band and the lower band. Okay. Otherwise, let's make it to that point. Thank you for watching this video. Wait for the next one that will be released in the next 2 days or so. From Binary Winners Club, this is Bernard. Bye bye. See you in the next video.